Holy smokers, folks, it's a real flapjack flipper out there. Look at that public account here today. I posted this on my X page, $3.667 million, new all-time high for the public account. Congratulations, every single person watching this right now who's been hitting all-time highs here. Incredible. Congratulations. You deserve it. Absolutely phenomenal to see, your portfolio hit a new high. Google stock is running. This has been a interesting time to invest into Google stock. And the sentiment around Google is horrible right now from the investment community, but the stock continues to move up. I'm up almost 22% on Google stock now at this point in time for a relatively new investment. This was an investment I made in the public account back on April 23rd. And now we're up over $15,000 on this, up about 22%. So Google's starting to run at this point in time. Cake continues to roll. Cake closing in on $64 here today, up $74,000 on Cake in the public account. That does not include dividends received. Meanwhile, the Russell was down here today. The Russell was actually down 0.4%. And to still see Cake with this upward momentum is phenomenal. The most under talked about big tech stock in the world, in my opinion, that is an absolute animal, is Shopify. Shopify. This stock is up over 56% in the past 3 months, and hardly anybody talks about this stock, and it's unbelievable to me. This is a position I have in the Patreon portfolio, actually. In the Patreon portfolio, up 94% now on Shopify stock. Such an under talked about stock. A stock that's not under talked about is Robinhood. Everybody talks about Robinhood. What we're talking about is this move done in Robinhood. You see the stock move down big here today, down about 5%. Stock's been red hot for honestly about the past year, but specifically the past 3 months. We'll talk about, is this hood move done? Okay. So 4 core subjects I want to get into this video here today. First up is why I love Google stock right now. Right now. Not only did I love it several months ago, but I love it right now. We'll talk about why this is a very attractive investment opportunity. Okay. I want to take you in depth on Google and get you to think higher level on this one. Second, why Shopify is such an amazing stock. One of the most perfect stocks in the stock market. Third thing we'll talk about in this video is the move in hood done. And the fourth thing I want to talk about here today is actually real estate. That'll be the last subject we'll get into in this video and my views on real estate. And the reason I bring it up is I asked for your guys' opinion on the main channel last week. I told you guys I'm building a new home, right? It should be done sometime in the spring or summer of 2026. But I didn't give you guys a full reference on this whole situation, whether I should rent out my current house or, basically sell my current house, things like that. And so we'll get into kind of some of the more details around it, where I'm at with my real estate investment, we can call it career, whatever we want to call it as far as that goes. Because my current house, I could only rent it for probably about 10 to maybe 14K a month. Meanwhile, if I sold it, I could sell it with something likely with a 3 in front of it. So I thought that this would be an interesting subject so you guys can hear my perspective and opinion on real estate investment and in those sorts of things in this video here today. Okay. Appreciate y'all joining me. One thing and one thing only I need for you guys. That's it. It's just smash the like button. That's all I need from you guys. I hope you can do that for me, please. These videos take so long to put these beasts together. And on the last video I put out on the main channel, we actually got over 10% of folks to basically hit the like button. So about 1 in 10 people did it. I hope we can do even better. Usually only about 5 to 7% do it. Can we please try, guys? I need two out of 10 people hit the like button. That's all I need, man. Appreciate y'all for being here. As always, if you want to subscribe to the channel, you can certainly subscribe. We're at a very large number of subscribers, and I appreciate y'all for being here, okay? Alrighty, Google McDougal. Let's talk about this one first, and then we'll get into all those other subjects, okay? First off, Google. Why is this stock such a great buy? Well, the thing you got to understand about Google is the sentiment's really bad around Google for the last, I would say, at least 6 months or so. Very poor sentiment around Google, and a lot of it stems back to ChatGPT and how much that has taken off over the past 2 years. And since ChatGPT has taken off and become so popular over the last 2 years, people are wondering, is Google search being disrupted? And it's created this very bad sentiment around Google stock right now, okay? No, I want you to think higher level when you think about a stock like Google, okay? First off, it seems like just about everybody uses Google maybe once a day, maybe multiple times a day, right? I have Google on my iPad. I have it on my phone. I don't think there's a day that goes by where I don't Google something at some point in time. Now, on work days, I Google a lot more. But I think even on just if I'm taken the day off, right? Which I don't know if I really ever completely take a day off, but even when I do that, like I'll still end up Googling something like, oh, let me look at this restaurant, let me see reviews, what people are saying about it on Google. Like a lot of times you end up using it once a day or sometimes many times per day, right? And some people don't use a Google app, so instead what they'll do is they just go to google.com, right? Now, additionally, they own obviously Google Chrome, which is a massive player when it comes to the browser, right? And we're talking 65% of the worldwide browser market share Google Chrome has. Now, the interesting thing about Google Chrome is it seems like it's bigger now than it's ever been before, but in reality, the market share has actually decreased in this company from where it was back in 2018. In 2018, the market share for Google Chrome actually peaked back in 2018 at 72%. So even though Google Chrome market share peaked 7 years ago, Google Chrome seems just as relevant, if not more relevant today than it did all the way back those many years ago, okay? Now, additionally, they also own YouTube, right? Which is probably, well, that's what you're watching this on right now. We do repost these videos on X as well, but high probability you're watching this video on YouTube right now, right? Now, YouTube is what Google bought way back in 2006. They paid $1.6 billion for it. And nowadays, through advertising and subscriptions, YouTube's revenue is now $50 billion plus. $50 billion plus a year, right? YouTube is an absolute behemoth of a company, and there's going to be a day when YouTube's likely doing $100 billion plus in revenue between everything YouTube related. Like, it's just incredible numbers, and it's a very hard thing to disrupt just because of the long form video format is so phenomenal on YouTube for videos like this, right? That are going to be, 20, 30, 40, 50 minute, hour long videos. Like, there's just nothing better than YouTube out there for that. TikTok's really good for those like little 15-second, 30-second type clips, right? Instagram Reels is really good for a lot of that as well. But when it comes to the long form video content, like YouTube just really dominates when it comes to that, right? Now, we look at Android as well. Google owns Android. Android has close to a 75% market share of mobile operating systems. Keep in mind, there's really only two players in mobile operating systems. Everybody else is really a joke in the space. It's either Android or your iOS. Like every single person likely watching this video right now, you either have an Android smartphone or you have an iOS smartphone. It's one of the two, right? And you're likely watching this video on it right now. Now, the interesting thing in regards to Android, it's actually been growing market share recently, while iOS has been losing market share. And I think a lot of that goes back to actually not even really software-related things. I think a lot of it's hardware, and I think a lot of people haven't been that excited about the hardware Apple's put out in the last few years. It seems like a little bit of too much copy and paste, and so Android's actually been growing market share, but they're by far and away the biggest player in mobile operating systems, which, mobile operating system continues to dominate. Like someday, the smartphone will be disrupted, right? And this huge Android market share and iOS market share will be disrupted. But when is that? When is the day like we have a device that like is AI enabled and like maybe we just have glasses on or something like that, where we feel like we don't need a smartphone anymore? Like, I don't know when that is. Maybe it's 5 years from now, maybe it's 10 years from now, maybe it's 20 years from now, maybe it's 30 years from now. There will be a day when that happens, but it's not today, and it's not tomorrow, and it's not next year. We know that, okay? It's no time soon. So the moral of the story is Android and iOS are going to keep cleaning up money for a long time to go in the future. It's just a question of are we talking 5, 10, 15, 20, or 25 years, right? Now, additionally, they have a business called the cloud. And their Google Cloud business is unbelievable. Just in the latest quarter, they did over $12 billion of revenue from their Google Cloud business. Now, two important things to keep in mind. This business is rapidly growing. If you look at the same quarter last year, they did $9.5 billion in revenue for this business line. The other thing to keep in mind is the profitability of this Google Cloud business is taking off like a rocket ship. Google Cloud used to lose them large amounts of money. Look at how rapidly they're increasing their profitability here. Operating income on Google Cloud in this same quarter last year was $900 million. In this latest quarter, it was almost $2.2 billion of operating income. Well over a double up on a year-over-year basis. The Google Cloud business is becoming an absolute profit giant for Google. And this is still early days in regards to the profitability of this business model. Keep in mind, this business model should get to a run rate where it's doing over $100 billion a year in revenue. Now, if they're doing $100 billion plus in revenue a year, I think there's a pretty safe assumption that they'll be throwing off operating income of, I would say, anywhere from $20 billion to $30 billion. And that's only in a few years from now. I don't think we're going to have to wait a decade for them to hit a $100 billion run rate in revenue. I think that's happening just in a few years from now. So in a few years from now, we'll likely see $100 billion plus a year coming in revenue from just Google Cloud. And then we'll be seeing likely 20, I would say, to $30 billion of operating income being thrown off a year from Google Cloud. Now, if Google Cloud was its own separate business, you could say Google Cloud, could easily command a valuation of, I would say $500 billion to potentially $1 trillion, depending upon how fast their growth rates are after that point, right? So keep that in mind. And that's a behemoth of a business. Also, what's a great business they own? It's called Waymo. Waymo. This is a huge money loser for the company in the short term, but I would say if we fast forward 5 or 10 years from now, it's going to be a massive money maker for the company. Now, Waymo is clearly, in my opinion, the leader in self-driving vehicles at this point in time. They already have their service in Phoenix, which I've taken in Phoenix a few times now. They have it in San Francisco. I've taken it a ton of times when I've gone to San Francisco. They have it in Los Angeles. They have it in Austin, Texas. They have it in Atlanta. And they also are expanding to more cities this year, and they're also testing in a ton of different cities as well. So I would say within the next 5 years, I don't even want to go 5 years. I would say in the next 3 years, you'll see Waymo in every major city in the United States of America. I think if it's 3 years from today, I don't think there will be a major city in the United States of America where Waymo is not in. And then after they get in all the major cities, it's just about scaling. And then from there, it's about, expanding their service to more, rural communities, like maybe smaller towns, things like that, right? But that's going to be that's like in the 2030s, we'll be talking about that this point in time. The 2020s is really just for them to expand into every major city across the United States of America and scale, right? And, this is a photo somebody posted on X here today, Waymo in Boston. So great to see Waymo out there in Boston. And the interesting thing is, in these major cities that Waymo's in now, keep in mind, the market share is going to be growing rapidly. Like rapidly. This shows you San Francisco and what has happened to the Waymo market share just over the last couple of years as the latest data out here, which was way back in kind of like March, April timeframe. And look at how they have now eclipsed Lyft in San Francisco, right? Let's fast forward another 2 years. I think they're going to easily eclipse gross bookings of Uber if we fast forward another 2 years, right? In San Francisco. So keep in mind, Waymo is the real deal Holyfield, and I don't see it slowing down. I just see it speeding up. And the great news is for Google, they've got all the money in the world. This is a big thing you got to understand about this. They have all the money in the world to spend to scale this business rapidly over this next 5 years. They've got it, man. They've got it because their core businesses are so incredibly profitable that they can get in a price war if they want. If there's any serious competitors to them, whether that's Tesla or others, they'll be able to beat them in price if they want. They might not take that approach, but they'll probably take that approach. Like if it goes down to a price war, you do not want to go against Google. Google's one of the, they got the most profitable businesses arguably in the world across the board. Like think about the cloud business, how big that's going to be in a few years. Think about Google search business, think about the YouTube business, right? Android, all these things. You want to go against them? I wouldn't want to go in a price war against them, right? So what will end up happening likely is they'll be, I don't think anybody's going to want to go to a price war with them, which means Waymo could end up being much more profitable than we anticipate if we fast forward 3 or 5 years from now, right? And there's a whole advertising opportunity that comes with Waymo as well that people aren't even considering. People are thinking about people signing up for Waymo plans over time and paying like a subscription fee to that, right? That will give them like discounts on rides or other things. People aren't even thinking about the advertisement opportunity that Waymo is going to have by knowing where you're going and where you're getting rides to over time. That's going to be incredible for Google there, right? Now, additionally, everybody's kind of written them off in regards to AI chatbots, right? Because everybody's like, oh, ChatGPT, they're dominating, they're so big, no one's going to beat them. There was a time period when you could have looked at Google in the search market and been like, Google has no chance. Like Yahoo search is dominating, these other search engines are dominating. Google has no chance, right? And that's the way a lot of people are looking at it. But I'm looking at Gemini here, and that's up to 13.5% market share now for generative AI chatbots, right? And it's not far behind Microsoft Copilot. I wouldn't be surprised if, we fast forward a year from now and it's already eclipsed Copilot by quite a substantial margin. I wouldn't be surprised if that happens by the end of the year, right? And I think it's going to continue to eat into ChatGPT's market share over the next, I would say, 5 years or so, right? So I think it's very, very early to try to write off Gemini as like, oh, it's not going to be successful. I think it's going to be very successful. Look at the estimated quarterly user growth this latest quarter, right? It was estimated that Google Gemini grew faster than Copilot and grew faster than ChatGPT. ChatGPT looks like it grew about 7%. Copilot grew about 6%. Gemini grew about 8%. Okay? And I think the way they're going to be able to integrate Gemini into YouTube over time, to Google search, and continue to get that built out and market it and get people to use it, I think they're going to do very well at that, right? And the scale, I mean, you're talking about billions and billions of people use one of Google properties on a daily basis, either Google search or the Chrome browser or Android, right? Or YouTube. There's a lot of touch points. And think about all the people that have Gmail, email address. There's a lot of touch points there, folks, that I think they'll be able to get people to use Gemini over time. And so as long as the product's great, right? And I've tested it. I've been very impressed with Gemini's product. I think they're going to keep scaling that out, right? No, the best thing about Google might be the fact that this company trades at a forward P under 20. Like what I just ran you through there is an unbelievable business model, right? And I didn't even run you through, by the way, there's more businesses than I even just ran you through. Google owns even more businesses. I just want to run through some of the most important ones for you guys, okay? So here's what we're getting with Google. Forward P under 20, right? Double-digit revenue growth. Earnings per share, that in my opinion is going to grow far, far faster than revenue over the next 5 to 10 years. You're getting an insanely diversified business model between all those businesses, right? It's incredible. I mean, everybody talks about disruption. I think it's pretty tough to disrupt Google with how many insanely great businesses they have, right? And how many growth businesses they have. And you're getting a business with great margins, like one of the best business models we've ever seen in the history of mankind, right? It's attractive. It's a very attractively priced stock, especially given this market we're in right now. I like it. I like it a lot, okay? So Google McDougal. Next up here, let's get into Shopify and why this is such a great stock. Then we'll talk about the move in Hood's done. Then we'll talk about my views on real estate, as well as if I was to have a $1.5 million windfall, what stocks I would buy with that money, okay? So Shopify. Look at this stock since Q4 2022. Guys, it's up 394% from those Q4 2022 lows. Incredible performance. But the thing you got to understand about Shopify is this. That stock fell 84% peak to trough. From where that stock peaked at in Q4 2021 to where it bottomed at in Q4 2022, 84% down. It got obliterated. But the issue with Shopify, it was a two-part issue, okay? One is people were way too excited about Shopify's business model back in 2021, right? You know, this is still like Rona era. This is like max speculation in the market. People were willing to pay anything for any growth stock. The market had been red hot, so people just went too crazy with Shopify, right? And they bid the stock all the way up to like $170 a share. In 2021, Shopify had no business being $170 a share. 2026 is a whole different situation. Like 2026, Shopify deserves to trade at $170 a share. But in 2021, it did not. But it did go there. Right? That's what happened. Like people just, they try to fast forward years and years of stock market gains for Shopify, and it came back to bite them. And then what happened in 2022 is people got way too depressed on Shopify stock. Like they got, I don't know, man, they thought it was the end of the world. And the stock went down to $25. It was crazy, from 170 to 25. But that, and by the way, that wasn't the only big tech stock that happened to. I mean, I saw that happen with nvidia. I saw that happen with Meta. I mean, you know, Netflix. I mean, I could go down a long list of them. And, you know, people went way too crazy with the selling in 2022. It was ridiculous, right? Now, meanwhile, all the stock price stuff is the stock price stuff. Look at 1000xstocks.com. Pull up the charts feature on 1000x. And look at all the different charts for Shopify, and you're going to find it looks pretty freaking good. Like, you look at the actual business model. Is this not the most perfect revenue chart you've ever seen in your life? Look at the trailing 12-month revenue for Shopify over time. right? This is where we're at right now, right? And this is where things are projected to go. So we have the past numbers here and we have projected here. Is that not as perfect can be? So the stock price of Shopify might be insane, might be crazy, it might be dramatic. It went from 170 to 25 and now it's up, nearly 400% from the bottom. Wow, crazy stock price. The business model looks better than it's ever been. The business model looks like one of the greatest business models in the history of mankind, right? Look at the free cash flow of Shopify on a trailing 12-month basis. It has been ballooning. And you know what's going to likely happen? Boop, 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 boop. That's going to happen, okay? I love operating cash flow because that doesn't take into account CapEx, right? Because a lot of times these big tech companies can spend a bunch of money on CapEx. So operating cash flow I think is even more important, at least in my opinion. And look where the operating cash flow of Shopify has gone on a trailing 12-month basis. And what do you think is going to happen with it for the next couple of years? I'm expecting something like this. It's beautiful, unbelievable, right? Now, additionally, when you look at the numbers, something very exciting going on with Shopify's business model right now, okay? If you look at the last quarter they reported, they had about almost 27% revenue growth. Now, if you compare them versus the previous 2 years' quarters for revenue growth, that eclipses both the previous years, which means we have a significant acceleration of revenue growth going on right now for Shopify, right? Look at what they were at in the same quarter in 2024. They were at about 23.4% growth. And then you look at the same quarter in 2023, they were at 25.2% growth. So they've clearly had a major acceleration recently in the business model. Now, if you look at the previous quarter, because you want to try to figure out, is that just a one-off thing? Or what about the previous quarter? Well, the previous quarter, they grew 31% revenue. That's versus the previous year's quarter, they grew 23% revenue growth. So there's a clear acceleration of growth rates happening with Shopify right now, which is phenomenal. This is exactly what you want to see, right? Now, meanwhile, investors, man, this is what investors do with great companies. They freak out, right? The stock went through a very tough time in the short term. And they were freaking out and they sold that stock and they sold that stock and they sold. Imagine selling Shopify at $25. There's people that did that back in 2022. Imagine selling Shopify at 30, at 40, at 50. And now you look at that stock and you're like, what did I do, man? But meanwhile, you got other people that in 2021 were happy to pay $170 for the stock. That's the stock market for you, right? And what it comes down to, these bad decisions come back to gambling, right? And basically a lot of people gamble in the stock market. They're throwing money out there. They're throwing money around, right? They're not actually investing. Investing, in order to actually invest, you've got to understand companies inside and out, right? You've got to research these companies. You've got to be running projections on these companies so you understand, am I getting a good deal on the stock? What if things go wrong? Then where's the stock price likely going? What if things go the way I expect them to go? Where's the stock price going? And what if things go better than anticipate? Where's the stock price going? You got to run projections. If you don't run your projections on 1000xstocks.com, create your own projections chart in a spreadsheet, okay? It might take you a few hours to do it. It's not rocket science, right? In 1000x, we do it all for you. We already integrate the numbers, so it's just so much more time efficient. You can run projections in a matter of seconds or minutes versus potentially hours doing it yourself. But run your projections regardless. Run your projections so then you can understand you got to run a bull case, you got to run a base case, you've got to run a bear case. And that is what will end up making you say, you know what, in 2021, Shopify at 170, it wasn't a very good buy, right? And you could run your projections in 2022 and be like, this stock at 25 is a steal deal of the century. I need to buy this stock. Instead of getting emotional about it, you're running math. You're running projections. You're sticking with numbers and not with emotions of, the stock went up a lot, the stock went down a lot. That's gambling type stuff, okay? And I teach you guys all this stuff in depth in my private stock group. If you want to apply for that, I'll put that as a pinned comment here today. You can click on that, fill out a form. Let's get you a higher level. Let's get you away from gambling in the market. And let's get you to start investing in the market and building sustainable wealth, building great portfolios that last through bear markets. The 2022 bear market, NASDAQ went down about 38% peak to trough. I'm telling you, a lot of people got thrown out of the market, right? And now they've missed out on hundreds of thousands or millions of dollars gains. If they just played this game on a higher level and they knew what they were actually doing, they weren't gambling, they would have stuck around and they would have made a fortune because they would have been buying countless great companies in 2022 at very attractive prices. And, now they would likely have hundreds of thousands of dollars of gains or millions of dollars of gains. Look at where the public count was back in 2022. Public count around this time, 3 years ago, was around a $1.1 million portfolio or so. And look at today, it's approaching 3.7 million. What a change, right? So let's get you up to a higher level. Let's get you access to 1,000x so you can run your projections, all that good stuff, pin comment, fill out a form. Let's get you up to a higher level than where you're at, okay? Next up here, let's talk about Hood. And is this move in Hood done, okay? Well, here's the thing you got to understand about Hood, okay? I sent a message to my private stock group members last week. It's a very important message here because this has huge ramifications for if Hood's move's done or if it still has a leg higher to go, okay? I said, let's play out a hypothetical situation here. I said, let's say earnings are a banger, stocks blast to new high after new high, and no major downturn this fall. A euphoric feeling starts to take over the financial markets. That's what I worry about the next phase of market cycle, which is altcoins and spec stocks and options going crazy, right? That phase is when people blow their gains they made on Palantir, Bitcoin, nvidia, AMD, Robinhood, SoFi, etc. that they've made a bunch of money on over the past few years, and they blow their money on spec stocks and altcoins. I said at first they make money and they get more sucked in, more addicted to this like quick money of these spec stocks and these like altcoins and things like that, right? And back in 2021, it was also the NFTs, like that was the hot thing, right? I said, next thing you know, they end up blowing all their gains on this crap and eventually lose 70 to 100% of their capital over the following 1 to 2 years. We need to avoid that like the plague if it happens, right? And I'm giving that message to my private stock group members, like make sure we avoid any of that speculative garbage. We don't want to get caught up in any of that, right? But the thing to understand about what I just laid out there, if that happens, it would be the most bullish thing for Robinhood in the short term. Like when I say short term, I'm talking like, let's say you get this speculation mania, everybody starts going all big on altcoins and spec stocks and options and all this stuff, right? It'd be very bullish for a Robinhood in the short term because they'd make a fortune off all that. It'd be horrible for Robinhood stock over the long term, like because people would end up setting themselves up to get obliterated at some point in 2026 and then in 2027, right? Because we know that's the last phase of the cycle usually is spec stocks and altcoins, right? And so what would be really bullish for their stock price and their numbers in the short term would end up being actually their huge downfall. Because then people would start losing tons of money. You would see assets start to go down for Robinhood, right? People would get more, let's call it less pessimistic let's call it less optimistic on the market, more pessimistic, more feeling like the financial markets are a scam, blah, blah, blah. And next thing you know, Robinhood numbers would start to look really ugly. And they would be comping against all these insane numbers that following year, right? Because they would be comping against like speculation mania. So the moral of the story is here, Robinhood's top could be forming if we're going to go into like a speculation mania, right? But you can still have a blow off top during the mania and then it comes crumbling down in a major, major way, right? And even a friend sent me this here today. A friend sent me this. He's like, Open Door was like some sort of, speculation play here today, I guess, and the stock ran all the way up to like $5 and then crashed all the way down to $3. That's the type of stuff I'm worried about. Like people starting to get into this sort of, speculation. Oh, this is a hot trade for the day. We're in this one. We're riding this baby from 3 to 5, right? And treating it like it's a casino. And the thing is, like, you can do the same exact thing at a casino. You do realize that, right? You can go down the win and do blackjack, and in a matter of 10 seconds, you'll have either doubled your money or lost all your money. Same exact thing you can do at the win. Go play roulette, bet on red or green, in 10 seconds, guess what? You either doubled your money or lost it all. Like, people are doing that same exact thing in the stock market, and this is stuff I worry about. So, but it's not bad yet. It could get bad. That's what I'm worried about. And that is when you'll know Hood will be peaking. And that's when you know Hood will have a big downfall. When I say big downfall, I could be talking 50% plus in Hood after the speculation mania ends. And, is it out of the realm of possibility for Hood to, crash 70 to 90%? Heck no. Not after speculation mania. Remember, Hood was like $80-something a share in the last speculation mania. And then that stock crashed all the way down to, where did Hood bottom back in 2022? I think it was either like $7, $8, $9, something like that. Run the math on that. It's like a 70 to 90% downfall. So could that happen to Hood again? Sure, after the next speculation mania ends, right? No, let's go ahead and talk some real estate here. And I'll also tell you, if I was to sell my current house and get a big windfall of cash, what stocks I would buy with all that money, okay? So Here's a deal so everybody has some more context from where I'm at with my real estate investing journey, which really started in 2019. I started looking into real estate long before that. Like, real estate's always fascinated me. Like, I remember first getting really interested in real estate probably like 2011, but I never bought a property. I was just focused on the market, the stock market, and just trying to get my money up that way. And so that's what I did for the longest time. And then I finally bought my first property, actually 2019, right? And so that property is rented. That is a rented property right now. Additionally, I have my Arizona house, which is in, this house is in a gated community. This one's in a guard gated community on a beautiful country club, right on the golf course. The hole's right there. Beautiful property. And that one, just a small house there. That one, incredible house. So I love that one. But that one I also rent now. That one I bought during 2020. And the issue was, with that one is I was just not using it enough, just to be quite frank, because a lot of times I want to travel other places in Arizona. So I just found myself like not really using it that much. It was great during Rona, like for 2020, 2021, when a lot of stuff was shut down, people weren't really getting on airplanes or you didn't want to travel. It was great at that time and I used the house a lot, but honestly, I wasn't really using the house. So I started renting that as well. I thought about bringing it back, but I'm like, I just can't justify like getting it back. And then, I don't know. So with my current house, right, this is a dilemma I have. The value I could get for the house is pretty extensive, but what I could rent it for is not that crazy. And that's why there's like nobody buying real estate investment properties really in Vegas right now. Because what you'd pay on a mortgage, for instance, right, is not going to be covered by the rent. There's no way. It's not even close, essentially. So we got a weird kind of dynamic in the market now at this point in time, especially on the higher end, right? So if I sold, I would get a huge cash windfall. The cash windfall would likely be, I would say at least $1.5 million or so, right? And we'll talk about where I would put that money if I did get that windfall. Now, that would create a taxable event, so we do have to consider that. If I sold the property and just didn't, invest in another property, something like that, it would create a taxable event. Now, the other thing with that is, okay, I sell, I get all that money, I pay my taxes. I could buy T-bills at that time, but my guess is T-bills are going to be earning a lot less. Because by the time I get the money and everything like that, like we could be talking, this could be summer 26 or it could be like fall 26. And my assumption is T-bills will be earning a lot less by that point in time. I think the Fed's going to be lowering. I think if inflation can be kept at bay, T-bills are just going to be going down and down and down, right? No, stocks, they could be way higher than they are right now by that point in time. Let's say the market goes more risk on. Let's say big tech earnings stay really strong. Say people get more confident in the market, more confident in the economy, all that sort of stuff. And then you get the tax benefits that really start to roll in next year, right, in 2026, as well as a lower interest rate environment. Shoot, like you could be looking at stocks that are significantly higher than where they are today. And so then you say, okay, now I got to buy stocks, but I'm going to buy them at way higher valuations than they are today. That's not great, right? And then you can say also I miss the next 5 to 10 years of appreciation in the home, right? The home's in a great part of Vegas in terms of location, phenomenal. It's like where people want to live. And so it's a tough decision. It's a really tough financial decision. And by the way, I think it's worth referencing, why is Las Vegas real estate appreciated so much? And why is Las Vegas real estate now considered like expensive? 15 years ago, 25 years ago, 35 years ago, Vegas was seen as a cheap place to buy a home. Like that was the value play. Like, oh, you move to Vegas, you buy a home for cheap. Not anymore. People are looking at the real estate prices out here in Vegas and looking at the price per square foot. And they're like, dang, like Vegas is getting a little expensive now at this point in time, right? Here's the deal. We got this place right over here, okay? It's called California. And California has like 40 million plus people that live there. And a lot of people like to leave California all the time. Some of it has to do with taxes. And they like to come to Nevada because Nevada has no state income taxes. So we attract a ton of wealthy people from San Francisco, a ton of wealthy people from Los Angeles all the time to buy homes over here because they might be paying 9% state income tax. And then they're like, I could go over to Vegas and pay nothing? That's really attractive. Let's say they're at an 8% tax rate in California. Let's say they have $1 million income, right? That's $80,000 a year more to, the California government versus nothing in Vegas. It's an extra $80,000 you can invest, an extra $80,000 you can have fun. You can go on a lot of trips with $80,000, right? And so higher net worth folks are even more likely to move to Vegas, essentially, right? And a lot of middle class folks in California do as well, because if you compare like LA to Vegas, LA is still a good value. You can still get a lot of regular homes in Vegas for, like $200 to $300 a square foot price. You can't do that in LA, right? It's just unrealistic. So we always just have, tens of thousands of people a year are moving to Vegas, and a lot of that comes from California, essentially, right? Now, additionally, you got to understand what I outlined here, okay, that black line, these are all massive mountain ranges. The whole valley is essentially surrounded by massive mountains, okay? And these mountains created so, you think desert landscape and you're like, can't they just keep building forever and ever and ever? It's just desert. Nope, not in Vegas, because we're surrounded by these mountains. And so you look here and you're like, dude, there's not a lot of land left to even build in Vegas. Like, you got some of this area in kind of like North Las Vegas, which not a lot of people like to live in North Las Vegas, but you got that land over there, land over here. Henderson's really built out at this point in time. You got this chunk over here, but that's like questionable kind of area to build. You have this little part over here still to build some more, and this little area over here. And then outside of that, you got to start going way, way out. Like, start working your way toward California border, or start working your way past like the Indian land over here. Like, you got to start going way out there. And so now, because Vegas has gotten so big, so many people have moved here, there's just not a ton of open land to build. And now if we fast forward 5 or 10 years from now, imagine how little land there will be left at that point in time to build. Like, imagine 10 years in the future. Like, I wouldn't be surprised if all of this even fills up in the next decade, right? So that's important to kind of understand about Vegas. And it's a little similar to kind of like LA. Like, you look at LA and it's like, why is LA real estate so much? Well, a lot of people want to live in LA, right? And you don't have just a bunch of land laying around. The issue with LA is it's surrounded by these mountains up here, right? And then it's got ocean all down here. So it's not like you can just got a bunch of vacant land in LA and you're like, oh, let's go build another community. No, they're like out of land over there in LA, right? And so the same exact thing's starting to occur with Vegas, and that's why you're starting to see so much appreciation in the Vegas real estate market over the past decade or so. And I wouldn't be surprised at all. And that's why, even with a lot of markets being weak, real estate wise, from a pricing perspective, Vegas has held up so well. When a lot of people are like, assume the same thing that would happen in the great financial crisis would happen to Vegas real estate this time around, right? You're seeing, so many markets in Florida go bad, so many markets in Texas. You've got land everywhere. It's not hard to build outside of Florida. Like, Florida, there's land everywhere. In Texas, there's land everywhere. In Vegas, there's not. And that's the thing people don't understand about what happened in the great financial crisis versus what happened this time around, is now the city's so big, it's so built out that you just don't have all that vacant land all sitting around anymore at this point in time, right? So anyways, I thought I would explain that so people understand the Vegas real estate market a little better, because it caused a lot of confusion. Like, I see a lot of real estate experts like so confused about why Vegas real estate prices have been going up the last few years, and they're looking and they're like, why are all these other markets so weak that were weak in the great financial crisis, but Vegas isn't? What's going on? Like, you look at Phoenix. Phoenix has land everywhere, man. I come from Phoenix. Like, there's so much land still to build because the mountain ranges in Phoenix are so far pushed out that there's land to build for the next, 50 years in Phoenix. Not like that in Vegas, right? No. $1.5 million. Let's say I sold this house. I got a windfall of $1.5 million. What would I put the money in? I'd put it in these stocks, okay? And keep in mind, this is not like me building a new portfolio. This would be just adding to positions I already have, okay? I'd put $300,000 in, and this is if you force me to buy these stocks, okay, or force me to buy stocks with the money. I'd put $300,000 in Cake, $300,000 in Google McDougal, another $300,000 in AMD, $300,000 in Adobe, and then I would split another $300,000 between Elf, EL, and Honest, right? 2 beauty companies, one on the low end, one on the high end, and then Honest, which is, almost a conglomerate of different products and things like that, okay? So that's what I would do with 1.5 mil if I had to be forced to invest it right now, okay? All right, guys, appreciate you joining me. As always, thanks so much for being here. If you're looking to take your investing knowledge up to a much higher level than where you're at, you want access to my entire library of premium courses, Become a Master Stock Market Millionaire Playbook, Stock Options Mastery, Dividend Investing Mastery, Financial Statements Mastery, my Valuation Mastery, plus access to my private Discord chat, the moves I'm making, my $3 million plus Fidelity account, the access to 1000xstocks.com, all that good stuff, plus exclusive weekly videos from me. Pin comment, click on that, fill out a form, get you access to that. Much love and have a great day.